Hi everybody, it's Jacques Fouché, founder of IGrow Wealth Investments, the #1 property investors club in South Africa, where we teach and train property investors how to build a multi-million rand property portfolio and pension fund with other people's money, other people's time and other people's knowledge so that they can retire financially free within the next 5, 10 or even 15 years from today. Thank you for being here and a very warm welcome to my webinar, and thank you for investing your time in your journey to financial freedom. I think you're going to find this webinar extremely valuable, and if you've ever wondered how normal people, normal salary earners, go about building substantial wealth for themselves and their families through investing in property, then you have come to the right place. This webinar will hopefully give you a fantastic and holistic overview of the market and also help you to see possibilities and opportunities in property that you might not have taken advantage of or maybe did not even know exist. Here are some of the incredible opportunities that I want to share with you during this webinar that has literally changed my financial life and also put me in a position where I can today choose to retire if I wanted to. So let's go and dive into the 8 core fundamental opportunities you're going to learn in this webinar. Number 1, you're going to learn how you can start with nothing and very little capital and build a multi-million rand property portfolio. It's always easier to have money and capital, but you can start your portfolio with literally no income. Number 2, I also want to talk to you about the South African Revenue Service, SARS, and their role in funding and financing our property portfolios for us as investors, and just giving us back truckloads of money on the condition you know which type of properties to buy and also how to structure your property portfolio correctly. Number 3, then I also want to share with you the secret tax incentives given to property investors where they literally are getting millions back from the receiver. To my surprise, less than 1% of property investors in South Africa know about these phenomenal tax incentives. Number 4, you are actually going to see how you can, within 5 to 15 years from now, be totally financially independent and be earning passive income that will set you up for financial freedom. Number 5, I also want to show you the risks that are involved in building your portfolio and the secrets that you need to know to effectively mitigate and eliminate risks. And by doing so, have the confidence and the competence to expand your portfolio much faster than the average investor ever could. Number 6, I'm also going to share with you how you can build your portfolio strategically and purposefully plan to pay no tax in your portfolio until retirement. Number 7, I'm also going to show you how many of our investors and myself are using an existing investment property to cut out taxation and then buy 4 properties to the value of 2 million rand without using any of our own money or capital. These things are so simple, but people, they just tend to make it very complicated. Number 8, you will also discover how you can build a team of loyal experts around you that will work for you and help you on your journey to financial freedom. Remember, your team will not do what you expect. They will do what you inspect. So you might have a good team, but there is a saying that goes, if it's to be, it's up to me. You are the CEO of your property investment team, and you need to take them with you to your desired destination. So these 8 points are in essence the core overarching opportunities that I'm going to be discussing with you and sharing with you in this webinar. You might have heard of me before, or even attended one of our life-changing property investment seminars, or even consulted with me personally, or you might have consulted with one of our in-house property investment experts. If you have, wonderful. Then you know how we help investors strategically build property portfolios. If you haven't heard of us, no problem. I'm going to give you a bit of background about me in a minute or two. If you really want to know the real reason why I love property so much, it's because it gives normal people like you and me the opportunity to get very wealthy, starting from scratch, starting from nothing. Building a portfolio, as you are very much aware of, is a long-term strategy and commitment. But it does not have to take 20 years to build a multi-million rand property portfolio. There are a lot smarter and faster and more intelligent ways of strategically making a lot more money in property. A little bit about myself. I'm born in Cape Town and went to school in Durbanville High, scraped through matric, and had no direction or idea what I'll be doing with my life. After struggling with hardcore labouring jobs and working for a furniture removal company carrying boxes and furniture, I quickly made up my mind about what I don't want in life. When I started in the property industry, I was like so many other investors today. I had no idea what it took, but I wanted to get rich quick and retire at the age of 30. I quickly realized that there is no such thing as getting rich quickly. When I began, I was 21 years old and I had a hunger to learn. I went to all the seminars, read almost all the books, listened to so many experts out there, and at the end of it all, I was totally confused and overwhelmed. And the worst thing was that everybody had a different viewpoint and opinion. I honestly didn't know who and what to believe. I was so badly wanting to just get out of the rat race of life. I bought my first property by using a very unique strategy called OPS and MDS. OPS stands for other people's surety and MDS stands for my dad's surety. Robert Kiyosaki in his book Rich Dad Poor Dad talks about OPM, other people's money, OPT, other people's time, and OPK, other people's knowledge, which is a concept I wholeheartedly endorse with everything I have because there's just not enough time and money and knowledge to do it all by yourself. My father's surety not only gave me the opportunity to build a multi-million rand property portfolio, but more importantly, it gave me the opportunity to use my first property, ironically enough, as a stepping stone to start multiple million rand businesses that I'm humbled, blessed, and very fortunate to own today. I'm not saying this to brag. I'm saying this that if I can do this at the age of 33 and barely making matric, then anybody with the right mindset and attitude and discipline can do the same and even a lot better and faster than I ever could. This, what I just told you, is really, for me, the hidden magic and untapped potential that lies awake in you and within property investment. And this was really the eye-opener for me because it's not just about investing in property, but how you can leverage property to invest in other business opportunities and ventures you love or have a passion for that might be in a total different niche or it might be even in a total different sector. Having your own property portfolio is like having your own little bank that gives you the opportunity to leverage tax-free money to start any other business venture your heart desires. This was a total game changer for me. And if you allow yourself to think broadly and creatively about property as a holistic wealth creation vehicle, you will start seeing unlimited potentialities and possibilities which will make you very wealthy. And if you start using property as the leveraging vehicle to finance alternative businesses, you will soon start to realize that there is a lot more in property than you ever imagined. Because the more money your business or businesses are making, the more you have available to expand your property empire with. The banks are lending much more readily and easily on an investment property than they ever would funding your new entrepreneurial business ventures. That's why anybody with a salary or combined gross salary of approximately 12,000 Rand can start building a multi-million Rand property portfolio and go on to start a multi-million Rand business. If you have no salary, but you know someone that has, well, there is your opportunity to go in 50-50 on a property because 50% of something is better than 100% of nothing. Is it easy? Definitely not. Is it worth it? Absolutely. All the blood, sweat, and tears. But what I should tell you is that I've made some horrible and stupid mistakes building my portfolio, and it cost me a lot of stress and millions in direct and opportunity costs. Today I can tell you that my so-called level of success is directly attributable to how I leveraged my properties team's knowledge, time, and money. But the practical element for me here was really how I assembled a top team of property investment experts, a team around me, and how I intelligently leveraged their skills and abilities to fast track my career. I've been fortunate to have coached and consulted with more than 5,000 property investors, presented property investment training seminars to over 25,000 investors across South Africa, and spending close to 8 years with a top team of in-house property experts every single day. The great news is that now my investors and you don't have to figure it out all by themselves and make all those mistakes that cost me and other investors dearly. I've now been through this struggle, and it cost me excessive money, time, and stress. You can now shorten your learning curve drastically by following the methods and the strategies in this webinar, and that we teach at our very popular IGrow Property Investor Seminars. What I've found is how you jumpstart your property career and how fast you get out of the blocks will give you the edge and momentum as an investor. It's very easy to replicate and duplicate this system in buying multiple properties and building your property business once you know and understand the system of what to do and when to do what. Over the years, I have learned that almost all investors will start their journey different to one another. There is a unique way and a distinct way you need to start off with for optimal momentum in your portfolio. By starting sequentially correctly, you can potentially end up with millions more at retirement than the investors starting without a clear and specific objective and strategy. Here are the 3 things you need to do before you start. Number 1, ask the right questions. The only way you can potentially start right first time is by understanding all the questions to ask before you start. And we'll be covering some of these questions in this webinar. If you don't know what you don't know, you're in trouble. So you need to know which vital questions to ask before you begin. Number 2, leveraging a team of experts. By leveraging a top team of experts that is in the field of property investment daily will without any doubt shorten your learning curve, minimize mistakes, and ultimately make you more secure and profitable in your execution. Number 3, getting the facts. The third most challenging thing is to bring all the team members and different facts and viewpoints to the table to create an unfair advantage for you. To start and expand as correctly and quickly as possible. By doing this, you give yourself what I call an unfair edge over other investors. Now I want to bust 7 major myths in building a multi-million rand property portfolio. These are the same things I almost always hear from my students and investors right after one of our property investment live seminars. Myth number 1, I'm not ready yet, or I'm too young or too old. The truth is, you were born ready. And if you believe the lies you tell yourself, you will never be ready, and you will always be too young or too old, because building a multi-million rand property portfolio has got nothing to do with your minor or major excuses, but it's got everything to do with your mindset. The question is, how badly do you want financial freedom, security, and more free time with your loved ones? Just start, and start taking massive action. Myth number 2, I can't afford it. I learned a very inspiring phrase from Dr. Wayne Dyer. He said, change the way you look at things, and the things you look at will change. My question to these potential investors are, and I ask them tongue in the cheek, do you think you'll be able to afford getting a property for free? I say this in a little bit of a teasing way, but it's true. You can get a property for free, especially if the deal is so good that it's taking care of itself. How many free deals would you be able to afford? Well, probably as many as you can find and get financing for. So it's the financing that is a potential bottleneck. This is where a tailor-made financing strategy is your key to unlocking great wealth. Many of our investors are buying these deals daily, and you could too. Many investors are buying properties for 1,000 Rand per month, 500 Rand per month, and some are buying properties for as little as 100 Rand or even 50 Rand per month. If you put the equivalent of your current repayment on your car into your property business every month, you will become wealthier than you could ever imagine. If you could buy a good, solid, sustainable investment property for 500 Rand or even 100 Rand per month, would you buy it? If you answered yes, then my question to you would be then, so why don't you? Why haven't you built a multi-million rand property portfolio? Every successful investor I met started with one property. Quite frankly, that's where everybody started. What are your reasons and excuses for not building a property empire? And if you're a first-time buyer or even a first-time property investor, it's the perfect time to get a property for free because the banks are still willing to finance you 100% of the purchase price. And of course, when you have an existing property, or if you are a seasoned investor, it's just as easy to get a property or properties for free because we use the equity in the one property to finance and subsidize the deposits and shortfalls on another property. This is where a financing strategist or bond originator is critical in helping you present and structure your application the way the banks see it, not the way you see it. Remember, they are giving their money to you, not the other way around. You give them what they want, and they will certainly give you what you want. Myth number 3. What if my tenants stop paying my rent and I can't get them evicted? What if it costs me 50,000 Rand or more? I often hear potential and very afraid investors ask. What if I own multiple properties and multiple tenants stop paying my rent, and then I have to get an eviction order against all of them and I'll be financially ruined? The answer is there is a magic pill that you can take, which is called rental insurance. And this will cover you for a non-paying tenant staying in your property for up to 6 months. And if the tenant stops paying his rent, the insurance company will handle the eviction process on the investor's behalf. Phenomenal. This means your income stream, your cash flow, is secured and guaranteed in your property business. I don't know where and how you can do this with any other business for as little as 150 Rand per month. Myth number 4. I can't afford an investment property right now. Then I will say, well, could you afford 500 Rand a month if you really tried? If you got the financing and you knew you're going to be guaranteed a rental income irrespective of the tenant staying in your property, will you go ahead and buy a property? What do you have to lose? Year 1 is almost always your worst case scenario because every year your rental income increases and your shortfall decreases. Myth number 5. I don't have money for the deposit. If you really wanted to become a property millionaire, then you need to be creative, right? So which avenues could you pursue to get the necessary money needed for a deposit? Let's look at 6 simple options where you possibly can find the necessary deposit or capital. Number 1. In your primary residence. Most investors are sitting on a pot of gold called equity. Now, equity is the difference between the current market value and the outstanding bond on the property. This is a great place to unlock equity and start your multi-million rand property pension with. Number 2, in your existing investment property, money could be available in your access facility or your property can be refinanced, meaning a second bond registered over the property, and in many cases investors are paying a lot of tax on the rental income but never entertained the thought of refinancing their equity to cut out taxation and get the receiver to buy more assets and properties for them. Number 3, you can get a deposit from other investments like a money market account, from your share portfolio, or even your unit trusts. Number 4, you can even use your existing pension as security and leverage to buy a property. Number 5, do you have a friend, a parent, a grandmother, or a business colleague which you can borrow the money from? People sometimes say, I will never borrow any money from any family member. Why not? Forget about ego. If you are making this into a financial transaction, giving them 10% or even 12% interest per annum, it could certainly be worth everybody's while. After a year or 2, you can refinance your investment property and repay them with interest and use the balance of capital you have refinanced to buy your next property that you use for investment purposes. Number 6, you could make a personal loan at the bank. Just crunch your numbers and you will see that over the long term, it's in all probability going to be worth your while. Myth number 6, I'm just too busy to run after tenants. Well, I personally don't know any successful investor that is running after tenants. You don't run after tenants, especially if you have a competent and committed rental agent looking after your portfolio. If you're spending more than 4 hours a month on admin in your portfolio, you're doing something wrong. Your time should be spent on strategy and finding ways of growing and building your portfolio and giving your attention to your core day job or daily profession. Successful investors work on their property portfolio and not in their property portfolios. Myth number 7. This is probably the most common myth of them all. I only want to buy a property that I want to live in. The best property investment performer is a property that best suits the market where there is sustainable capital growth and sustainable rental income growth. This means we need to cater for our tenants and not for us. They will live in the property and we will never live in it. What some investors don't understand is that they do not need to like the property to make money with it. And buying entry-level investment properties is like buying stock or shares on the stock market or even buying gold. This is a commodity and a vehicle that needs to make us money. No emotion, only numbers. If you give your tenant what he wants, he will certainly give you what you want, and that is financial freedom. Now let's dive into the 9 action steps that you can follow to successfully build a multi-million rand property empire. Step number 1, what's your goal and outcome? Begin with the end in mind. Stephen Covey in his book, The 7 Habits of Highly Effective People, wrote about begin with the end in mind. What's the end result that you're after? How much passive income and capital do you want, and by when do you want it? Be specific and be clear about your goal and your desires. How much passive income do you want from your paid up property portfolio every month? 10,000 Rand a month? 20,000 Rand a month? 50,000 Rand a month? Or even 100,000 Rand a month? Do you want this in 5, 10, 15 or 20 years from today? Create your goals with crystal clear clarity about what will make you financially free and secure for your retirement. Forget about how. Just think about what you want. Step number 2, know why you want to build a property portfolio. If your why is strong enough, you will find any how to make it happen. And you will be turning your wishes, hopes and dreams into a reality. Write it down. Get it on paper. Because if it's in your head, it will remain a wish and a dream forever. Find the reasons driving you, like financial freedom, a better education for your children, more free time with your family and your loved ones. Having more free time to spend on things that really excites and inspires you should be the main focus and foundation that you fall back on and remind yourself of whilst you're building your property, pension and business. Remember, you'll be starting a proper property investment business, and every property is a business and every tenant is your employee working for you in your business. Your rental agents are your managers in your business, and you are the CEO of your property portfolio and your financial freedom. Step number 3, you need to invest in yourself first before you invest in property. Attend seminars, workshops, get a coach, read books of the topic of real estate, and listen to audio CDs of successful real estate investors while you're driving in your car. Join a property investors club. It's like joining a health club or a gym. If you want the results, you have to join and you have to start working out. Then you start surrounding yourself with a top team of experts and start using their strengths and experience and their skills to propel you forward. Step number 4, find your unique strategy. A strategy is never fixed. It's rather a predefined goal that you desire to achieve, and you being flexible and adaptable in your approach in achieving your end goal. Flexibility and adaptability must be the 2 key pillars you incorporate in your overarching investment strategy. Decide on a specific strategy, but know that for most successful investors, it's not one, but a combination of stacked and layered strategies that will give you the best and fastest compounded results. Let's look at 11 basic options available to investors. Number 1, are you buying and selling property? Because then you are a speculator and not an investor. And speculation brings with it a total different set of rules, like from a tax perspective and VAT consequences, that is obviously not the scope and discussion topic of this webinar. Point number 2, are you buying and holding and building a portfolio for the long term as a pension and business? Well, I hope so, because this strategy has made more millionaires than any other property investment strategy we know of. This strategy made Robert Kiyosaki, the author of the book Rich Dad, Poor Dad, a billionaire in South African terms. Number 3, or are you combining a buy and hold strategy with a buy and sell strategy? This can sometimes be one of the fastest ways to build a portfolio. Number 4, what type of properties are you focusing on? Only cash flow positive properties, or only high capital growth properties, or are you focusing on a mixture of these two elements in your portfolio? Number 5, what type of property will generally be the best suited in your portfolio and be best suited for you? Remember, it's not always the property with the best return that is going to be giving you the best holistic return within your integrated property portfolio. Number 6, are you buying into a new development that you can buy below market value? Number 7, are you buying on a sheriff's auction or a sheriff's auction property for below market value? And do you understand all the risks and costs involved? Number 8, are you buying a liquidation or sequestration property? Number 9, are you buying property in possession? Number 10, are you buying distressed property? And number 11, are you investing with your spouse, and are you married in or out of the community of property? This alone can make or break you in terms of building your portfolio and getting future financing from the banks. Each option has its own unique twist, advantages and disadvantages. You need to find out which option will suit you best. Step number 5, decide upon the correct wealth protection and wealth creation structures. A few questions must be asked. Are you going to buy in your own name, and why? Are you going to be buying in a wealth creation trust, also referred to as a property investment trust? Are you going to be buying in a company, and why? Are you buying as a partnership? I've personally found a partnership in many instances to be a sinking ship. Sometimes it's double the risk for half the profits. So make very sure you understand your partner, as well as the very technical nature and ramifications of a partnership in terms of your exposure for future financing purposes of your property portfolio. Step 6, assemble your property investment team members. The ideal 7 fundamental team members will consist out of the following experts. Number 1, an investment consultant or strategist, helping you to implement your tailor-made existing and future strategies. Number 2, your tax advisor and accountant, ensuring you use the most tax efficient routes possible and ensure you never step on the receiver of revenue's big toe. Number 3, your trust and structuring experts to ensure your assets are protected and you build your portfolio on the most solid foundation. Number 4, financing strategist and bond originator, must ensure that you can keep on buying and qualifying for financing now and in the future. Number 5, your rental management expert. They will ensure that you are not running after toilets and tenants. They will source the tenants and handle the rental contract and collect the rent on your behalf. Team member number 6, conveyancing attorneys, to protect your property interests and ensure a smooth transfer of the property into your name or entity. And number 7, your personal financial advisor. He will ensure that your life insurance is structured the way only 1% of investors' life insurance policies are structured. The 2 main criteria is for number 1, asset protection of the policy proceeds, and number 2, some serious tax advantages if it's structured correctly. Step 7, your financing strategy. You need a tailor-made financing strategy based on the 7 banks' lending criteria and view of exposure. The banks are ABSA, Standard Bank, Nedbank, FNB and Investec, RAND Merchant Bank and SA Home Loans. Your financing strategy will also depend on many other fluctuating factors like your primary bank, where your salary or other income is paid into. This determines how the banks will look at your current exposure and, very importantly, how they look at existing and future rental income for future properties you are planning on buying. Before your structure is created, you need to look at your current capital availability, your personal affordability, disposable monthly cash flow, and your short, medium, and long-term goals. What good does it do to create a structure, but you can't get financing in it? The rule is first things first. Step number 8, your financial structure. After your financing strategy is ascertained, then only an appropriate property investment structure is set up to ensure all the steps run in the correct order and sequence. The best structure, by far for long-term property investment, is an inter vivos discretionary property investment trust. Your trust will play a major part in the loan-to-value ratio or criteria the banks apply to your property. Currently, most of the banks will only consider 80% financing when investors buy in a trust or a juristic entity. This means extra capital will be needed from the investor. When you watch this presentation to the end, I will include a bonus-free trust training online video course valued at 997 Rand. I've specifically designed this for the property investor and entrepreneur, and I'll be explaining to you the benefits of using the most tax-efficient and asset protection structures you can use as a South African investor. Step number 9, building your property portfolio with rental income, which is taxable money, or refinanced money that is non-taxable money. There is no right or wrong. It is what you feel the most comfortable with and which strategy will ensure you get to your retirement goals the fastest and with the least amount of risk. Let's look at strategy 1. Taxable income strategy. This is a slower and more conservative strategy. This is where you use the rental income generated from your existing properties to reinvest back into your existing portfolio to reduce your loan-to-value ratio, your outstanding debt, and further increasing your positive cash flow to pay your existing properties off a lot faster. This is a very tax-unfriendly method, but it works, and it has made millions of investors very, very wealthy. Strategy number 2. The tax-free strategy. This is a faster and more aggressive strategy, and also the strategy that I'm implementing personally in my own property portfolio. This is where investors use strategic refinancing, tax-free money, to further expedite the growth rate and expansion of their property portfolios. I will show you an example of how you can literally buy a 2 million Rand property portfolio for free. This means buying 4 500,000 Rand properties costing you no money out of your own pocket. Let's look at a practical example. If you buy the right entry-level property, you will see that the capital value and rental income will double on average within every 8 years. So if you bought a property for 500,000 Rand 8 years ago, it will be worth plus minus R1 million today. If your rental income was 4,000 Rand when you bought it, it will be about 8,000 Rand today, meaning 8 years later. When you bought the property initially, you had a shortfall of 1,000 Rand per month. 4,000 Rand rental income and 5,000 Rand expense. That left you with a shortfall of 1,000 Rand. 8 years later, the rental income increased to 8,000 per month. Let's say our expenses remain at 5,000 Rand per month for illustrative purposes only, because in practice, your expenses would have decreased after 8 years as a result of the capital you've paid off on your outstanding bond. Now, after 8 years, you have a positive cash flow of 3,000 Rand per month times 12, which is 36,000 Rand for the year. Now, there is nothing wrong with positive cash flow, and for many investors, this is the ideal passive income situation. The problem is that I will have to pay tax on the 36,000 Rand, especially being on a 40% marginal tax rate. It comes close to 14,400 Rand tax that I need to pay over to the receiver. I personally prefer the receiver to fund and finance my portfolio, effectively getting them to work for me in building my property pension, and not always, the other way around where I work my butt off for them. So what I do is the following. I go to my financing strategist, my bond originator, and he will increase my existing bond from 500,000 Rand to 800,000 Rand. I will now have the choice to leave the 300,000 Rand in the access facility, or my banker can pay the 300,000 Rand lump sum into my personal check account. For the purposes of this strategy, let's say that my banker pays the 300,000 Rand into my check account. My bond repayment will now increase with approximately 3,000 Rand per month once I receive the 300,000 Rand cash lump sum payment into my bank account. The question is, how am I going to afford the additional or extra 3,000 Rand monthly bond repayment? Well, the 3,000 Rand rental income we would have received at the end of the month is now going towards the repayment of the additional 300,000 Rand, the second bond we made on our property. What is the effect of implementing this strategy? Well, if you're not receiving any rental income, there is no tax to pay. No income equals no taxation. The question is the 300,000 Rand lump sum money taxable or non-taxable or partly taxable? The question you should ask yourself here is, was the 300,000 Rand, was it income or was it a loan? And this is why I love property, because the whole 300,000 Rand is completely tax-free money. We made a loan, and nowhere in the world will a loan be taxable. It's always tax-free. No tax payable on the rental income, and no tax payable on the lump sum of 300,000 Rand. Now, we are ready to buy 4 investment properties, but not with any of our own money. We are now going to get your previous property's equity, the banks, the tenants, and SARS to fund a 2 million Rand property portfolio for you 100% free. You might think that this is a very risky strategy, buying 4 properties. You might even ask, what if? What if the tenants stay in the property and don't pay their rent? I will have to be responsible for the bond repayments and potentially costing me thousands every month. Well, we've already addressed that, because you can eliminate that risk completely by taking out rental insurance covering you for a tenant staying in your property for up to 6 months. Now, if you were guaranteed that your tenant will be paying his rent, because that is the exact situation that you will be in, how certain and more aggressive can you be in building your residential property portfolio? Now, you also know why some of our investors start with 5 to 10 properties immediately in their portfolio, because they have the peace of mind knowing that their rental is coming into their bank accounts every single month, and that their tenant will pay irrespective of the tenant staying in their property and not paying them. Now we buy 4 properties for 500,000 Rand each, a portfolio to the value of 2 million Rand. Not all at the same bank, of course, with a 90% loan to value ratio and a 10% deposit down payment. This means that you have to put down a 50,000 Rand deposit over 4 properties, which is 200,000 Rand, and this deposit you will get from your 300,000 Rand lump sum equity taken from your initial property. So let's say your total shortfall per property per month is 500 Rand in year 1. This will give you a total monthly shortfall of 2,000 Rand per month on the 4 respective investment properties in year 1. In year 2, your total shortfall per property per month is going to be 100 Rand per month. This will give you a total monthly shortfall of 400 Rand per month on the 4 respective investment properties. This will give you a total monthly shortfall of 400 Rand per month on the 4 respective investment properties, which comes to 4,800 Rand for the year. Your total cash flow expense in year 1 will be 24,000 Rand. Your total cash flow expense in year 2 will be 4,800 Rand. Total cash flow expenses over a 2-year period before the properties break even and go into a positive cash flow position is 28,800 Rand. This leaves you with a bit more than 70,000 Rand left over after all the shortfalls on your investment properties have been paid. This 70,000 Rand can be used to buy a toy or 2, or it can be very responsibly reinvested into one of your access facilities in one of your properties to make provision for any potential interest rate hikes or any unforeseen expenses like repairs and maintenance. And you will of course be saving interest on the 70,000 Rand lump sum that you have now reinvested back into your access facility. Let's look at what the growth will be on your 4 properties when they break even and at the end of year 2 on a conservative 10% capital appreciation per annum and rental escalation of 9% per annum. Also keep in mind that if you bought the properties with 50,000 Rand of equity in from day one, you would have made 200,000 Rand immediately. That is more than 100% return on your capital invested. But because these properties cost you nothing, your return will be defined as an infinite return. Let's look at the growth in your portfolio. End of year 1, the equity growth is 200,000 Rand. End of year 2, the equity growth is 220,000 Rand. So the total capital growth over a 2-year period was 420,000 Rand, plus you bought the 4 properties for 200,000 Rand below current market value. You made a total growth and equity of 620,000 Rand over 2 years that did not cost you a cent out of your own pocket, and the properties are in a positive cash flow position. In all probability, if you don't refinance them ever again to buy any more properties, then you'll never have to take out a cent for these properties ever out of your own pocket. Let's just recap on what you accomplished here. You bought 4 properties with tax-free money, refinancing money, also known as the bank's money, for free. It didn't cost you a cent out of your own hard-earned after-tax money. The 300,000 Rand was an initial loan. Minus the 200,000 Rand for the deposit, minus the 100,000 Rand that you kept in the reserve pool to cover the first 30,000 Rand of shortfalls up until such time that the properties reached and breached its break-even point. We only used 30,000 Rand to cover the shortfalls up to break-even point in year 2. 70,000 Rand is still available, either to keep in the reserve pool for any unforeseen expenses or to spend on toys and some personal things if you want to. Number 4, the amazing thing here is that you bought a 2 million Rand property portfolio with no money leaving your pocket. You got a 2 million Rand property portfolio for free. Now the fun begins, because when you own 5 properties, it's time to get SARS to work for you. It's time to get SARS to finance and fund your portfolio and your retirement. SARS says in a very specific article that is firmly entrenched in our Income Tax Act called Article 13.6 that for every 5 properties we buy as property investors, they are willing to give us 55% back of the initial purchase price as a tax deduction against our personal income tax. It must be at minimum 5 properties that we own in our portfolios. For example, 5 times 500,000 Rand properties gives us a portfolio of 2.5 million Rand. 55% of that is 1.375 million Rand that SARS will give you back as a tax write-off against your own personal income. You can now build your property portfolio tax-free until retirement. The more properties you acquire in your portfolio, the more SARS is willing to help you and fund and finance your retirement for you. I've also included a special free report specifically written by me and one of my tax experts on Article 13.6, where we will explain in more detail how you can benefit from this incredible tax incentive. These are some of the high growth and rental growth properties we've got available in our portfolio that conforms to SARS's tax criteria and incentives. Number 1, it's called Alente. It's Boraine Estate in the new developed area of Kraaifontein. This development in Boraine Estate has been specifically designed to offer you an excellent rental and capital growth return. But more than that, it's a living, breathing suburb and an excellent investment with a guaranteed capital growth of 6% per annum. Although our investors experienced more than 9% capital appreciation per year on average since it launched 3 years ago, your total monthly cash flow out of pocket expense, including all costs like levies, rates, taxes and bond repayments, is as little as 1,000 Rand per month in this wonderful, exclusive, one-of-a-kind estates. Number 2, Maitland. 202 Coronation. This development is in the booming area of Maitland in the UDZ, in the Urban Development Zone. SARS is willing to give you 220,000 Rand back as a tax incentive. This is a real tax deduction to reduce your personal income tax liability. And this they are willing to do on an average priced property of 400,000 Rand. These properties are positive cash flow from day one and present incredible value for money. Maitland is situated next to the CBD, the Central Business District of Cape Town. And in our estimation, Maitland will follow the same growth path Woodstock did over the last 12 years. Woodstock saw close to 300% growth over the last 12 years. Carlton Mews. This development is IGrow's bestseller, and we only have a few investment properties available. These properties are positive cash flow from day one and with immediate equity of 60,000 Rand on signature of the offer to purchase. And we estimate about 80,000 to 100,000 Rand of final equity on registration of these specific units. Gross rental yields are touching 13% with net rental yields that are very close to 11%. And these type of figures are not the norm, and they have been exclusively discounted for the IGrow Platinum Club members. Now, all of us know and are very familiar with Stellenbosch. This is one of the best investment properties in Stellenbosch, and they start from 689,900 Rand. Our investors' total shortfall per month on these 60 square meter properties on a 90% loan to value ratio is about 200 Rand per month. This means that you can buy an investment property in Stellenbosch for 200 Rand a month. This is the total shortfall that you will have to fund on Pernod Mews per month, which includes your levies, your taxes, your rental management costs, as well as your bond repayment. I think you will agree with me that nowhere in Stellenbosch will you get a better deal than this. Keep in mind that Stellenbosch is also one of the highest capital growth areas in South Africa. And capital growth is where we as investors will make our money over the short, medium, and long term. And I call capital growth tax-free money. We've got only 4 properties remaining in this exclusive estate. If you want to take your learning to the next level, and you want me and my team to teach and train you, I want to tell you about the system we have and invite you to enroll as a Platinum Club member, so you can have all the necessary expertise, tools, and team to ensure your success first time in building your portfolio. It's a 12-month membership, and I will send you a free video that explains all the comprehensive and exclusive benefits we offer our Platinum Club investors. A similar type of service can cost you up to 20 to 30,000 Rand a year, but you won't pay anywhere near that when you join our club for a limited time only at an extremely low price of only 997 Rand as a once-off registration fee and 247 Rand per month for a 12-month period. The total membership costing you 3,961 Rand for the year. I've also included a bonus high content trust training video that I've created for business owners, entrepreneurs, property investors, and wealth creators. This course is valued at $997, and if you leave a comment in the Facebook comments area on the thank you for attending our webinar email, I will send you the video absolutely free. I'm also including the following 2 reports called Article 13.6 and the Incredible Power of Trusts. I will also respond to your comments personally in the Facebook comments area section. Then lastly, I would like to offer you a massive free bonus valued at 4,997 Rand when you join our club as a Platinum Club member. Your bonus is the IGrow Property Investor Software Program that takes the guessing out of property investment, and it literally conquers 99% of your fears because you'll be making an informed financial decision as you're building your property portfolio. Please go to www.igrow.co.za, our main website, and on the homepage you will find our Platinum Membership Benefits video, and watch it and join as a Platinum Club member today and secure your financial freedom through property investment.
Invest strategically, invest intelligently, become financially free. Successful investing.